Good day, everyone, and a warm welcome to Ester Industries Q1 FY22 Analyst and Investor Conference Call. We have with us today Mr. Arvind Singhania, the Chairman, and Mr. Pradeep Kumar Rustagi, the Chief Financial Officer. We will begin this call with opening remarks from the management, following which we will have the floor open for an interactive Q&A session. Before we begin, I would like to point out that some statements made in today's discussions may be forward-looking in nature, and a note to this effect was sent to you in the invite earlier. We trust you have had a chance to go through the documents on financial performance. I would now like to invite Mr. Singhania to make his opening remarks. Over to you, Arvind.
Thanks, Gavin, and thank you everyone for joining us today. I hope all of you and your loved ones are safe and healthy. As mentioned by Gavin, I have alongside me Mr. Pradeep Rustagi, our CFO. I will start the call with brief overview of all our businesses, post which Pradeep will walk you through our financial performance for the quarter. We are delighted with the start we have made to FY22. For the quarter under review, revenue and profitability grew 69% and 28% respectively over the previous year on the back of improved performance from specialty polymer and engineering plastic SBUs. As indicated in previous calls, we expect specialty polymer to perform well during the year, and Q1 has offered a glimpse of what's in store for the business. The strong performance of specialty polymer was well supported the performance of our other two businesses, namely polyester film and engineering plastics. Film business continued to maintain its recent growth momentum with volumes remaining elevated. Engineering plastics, after undergoing a challenging few years, has made a sharp rebound. Performance of engineering plastics business has been unprecedented since the last 3 quarters. Let me now move on to the individual businesses, starting with specialty polymers. The business has performed exceptionally well during the quarter on the back of increasing demand for our products. As I have been indicating, last year's performance was not a true reflection on the business's potential, as pandemic-led disruptions impacted both operations as well as supplies. Lockdown enforcement across our key markets and logistical challenges disrupted the growth momentum registered during FY20. Product offtake of our key product MB03, which finds application in the commercial carpet segment, was severely impacted given the lockdown. However, we knew it was a temporary phenomenon, and we were always confident that as the situation normalized, volumes too will. We started witnessing pickup in the volumes towards the end of last year itself, especially in the last quarter following the resumption of trading and commercial activities globally, which gave us the belief and confidence of delivering a strong performance during FY22. Innovative PBT volumes too continue to be strong. Most of you are aware we supply innovative PBT to global chemical leader. We have been consistently selling higher than agreed volumes over the past 2 years. We believe a similar trend will continue during the current and following years as well. We exported 344 metric tons during the quarter under review, as against 311 during the corresponding quarter last year. Furthermore, the other positive development for us has been the commencement of commercial sales of MB07. MB07 is added to make polyester dyeable with deeper and darker colors. We finally received the customer approval after working at it diligently for the past 3 years. Volumes have been good, and we expect to scale them up consistently in coming years. Apart from MB07, we have also achieved techno-commercial qualification for another product, namely LMC03. We are very close to achieving techno-commercial qualification for other innovative product MB16. While we expect the volumes for LMC03 to pick up significantly over the next 2 to 3 years, we expect commercial sales of MB16 to start during FY21-22. Encouraged by the growing demand for certain high-margin grades of specialty polymers, the Board of Directors in their meeting held on 9th August 2021 have approved capacity extension of specialty polymers at a cost of Rs 80 crores. We have been continuously working towards building a comprehensive product portfolio to lower our dependence on particular product, and are happy with the way things are shaping up in this regard. We are confident of achieving our stated objective in coming years. Moving on to the film business, Q1 maintained the recent growth momentum in volumetric terms. Besides benign realization, higher proportion of chip sale that has very low margin contributed to lower margin percentage of the segment. Domestic demand, as I have been saying, remains strong, growing at about 11 to 13% annually, with FMCG being the key user industry. Long-term prospects of the business remain strong, though in the near term, realization/margins may remain under pressure owing to the incremental supply that has and is expected to hit the market. Moving on to the quarterly performance of film SBU, we registered a revenue growth of 40% over the largely owing to higher volumes and chip sales. Margins though softened a bit during the quarter despite reporting a healthy top-line growth. The main reason for margin compression is commissioning of 2 new production lines overseas. Another reason having impact in the short term is input cost pressure on smaller packs for snack foods. Our efforts in recent years have been directed towards improving the share of high-margin value-added products in line with the objective of decommoditizing the business. The share of value-added products during the quarter stood at 20% as against 17% during FY21. We have been guiding our efforts towards increasing the share of the high-margin products to 25 to 30% and believe we are very much on track towards achieving our objective. A quick word on our new plant at Telangana before I move on to engineering plastics business. As you know, we are setting up a new greenfield unit of 48,000 ton per annum state-of-the-art plant in Telangana through our wholly owned subsidiary at a cost of 586 crores. We expect the plant to be commissioned on time by October 2022. The new unit post-completion is expected to deliver incremental revenues of rupees 500 to 600 crores and generate additional EBITDA of 110 to 120 crores. The funding for the project is secured. It will have a debt component of rupees 410 crores with the remaining 176 crores being internally funded through equity investment. Of the 410 crores, rupees 240 crores will be euro-denominated loan at less than 2% all-in cost, along with rupees 170 crores being secured at 8 to 8.5%. Total cost of the debt for the project would be in the range of 5.5 to 6%. We believe the new unit will help us better serve our customers besides adding to the overall growth of the company. Moving on to our engineering plastics business. Performance during the quarter was impacted by the second wave of the pandemic, resulting in lower volumes and revenue for the quarter, though EBIT in absolute terms during the quarter remained quite steady. However, we have seen sales volume pick up pace again following lockdown relaxation and recommencement of commercial activities. FY21, if you recall, had been a stellar year for this business on the back of strong demand from the end user industry and rising trend of base polymer prices. Furthermore, we are also working towards our product mix in the business and operational efficiencies, which is starting to deliver the results. With relocation, we expect further improvement in the business as relocating the unit will help us better serve the customers and cut down on logistical expenses, both of which would help in further improving profitability of the business. We are making an investment towards relocation and setting up of a new extruder to meet our customers' requirement in light of improving demand. To conclude, I would just like to state that our recent performances demonstrate the structural shift in our business from being a commodity-dependent business in the past to a specialty-dominant business. We have significantly altered the margin and profitability profile of the business. All the 3 businesses have innate strengths and growth levers which will help us sustain this recent momentum. Specialty polymer being largely an IP-protected business eliminates any competitive threat. Furthermore, being an innovation-driven business, it has high switching costs for the customers and therefore ensures customer retention and commands high margins. In films, our endeavor is towards improving the product mix with a focus on increasing the share of high-margin products, which will ensure better quality of growth. Our engineering plastics business has a strong tailwind, and here too we are working towards improving the product mix. Expansion of capacity by installing a new extruder and relocation of the unit will further improve the business economics. That concludes my opening remarks. I now hand over the floor to Pradeep to walk you through our financial performance. Thank you.
Good afternoon, everyone, and thank you for joining us today. I'll quickly walk you through our financial performance for the quarter ended June 30th, post which we can begin the Q&A session. Starting with the top line, revenues from operations stood at rupees 319 crores as against rupees 189 crores reported during Q1 FY21, higher by 69%. The performance could have been even better but for the second wave of pandemic, which disrupted activities during early part of the quarter. Having said that, all our businesses performed well with a strong rebound in sales and profitability witnessed by especially polymer business. EBITDA for the quarter stood at rupees 64 crore as against 62 crores generated during Q1 FY21, higher by 23%. Margins though contracted in film business during the quarter owing to commissioning of new capacities in overseas markets and input cost pressure on smaller packs impacting demand in the short term. Our strong performance by specialty polymer SBU and in engineering plastics SBU ensured that financial performance of the company turns out to be better than corresponding quarter last year. Finance cost for the quarter stood at rupees 4.94 crore, that is 1.55% of the revenue from operations. As of June 30th, 21, our outstanding interest-bearing term debt net of free cash stood at rupees 167 crores, while interest-bearing working capital liabilities stood at rupees 31 crores. Interest-bearing debt net of free cash as a multiple of annualized EBITDA remained at a healthy level of 0.65 as of 30th June 21. We are committed towards maintaining better than prudent debt equity levels and will continue to take steps to ensure that no undue pressure is exerted on our balance sheet. Depreciation for the quarter stood at rupees 9.21 crores as against 8.83 crore reported during Q1 FY2021. Profit for the quarter stood at rupees 38 crores as against rupees 29 crore generated during Q1 FY21, that is higher by 28%. To conclude, I would just like to reiterate that we are confident of all our businesses delivering consistent growth going forward. The last couple of years have demonstrated the true potential of all businesses and its vindication of our strategy towards moving away from commoditized business and shifting towards the specialty side. All our businesses are well positioned to deliver strong, consistent growth over the coming years and create value for our shareholders. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may please press star then one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Namaskar Singhania ji.
Namaskar.
Hope sir you are doing good, sir. All well.
All well, thank you.
Thank you, sir. Sir, congratulations, sir, on steady set of quarterly numbers performance now on a consistent basis, thereby cementing our confidence in the business model. Sir, firstly, sir, if you could give some more color on our putting capex for the specialty polymer part of the story. What are the inroads that we have? What transported us to go for this expansion at this stage? Give some more color on the same, sir.
I'll tell you. The specialty polymer business has rebounded very well after being hit by pandemic last year. We had only 55 crores of revenue compared to 76 crores in the year before. But there has been a very strong rebound in all our products. MB03 has almost come back to normal. Our specialty PBT, innovative PBT volumes are growing year on year. And the biggest thing that we achieved was commercialization of MB07. Now, MB07 has actually has come as a very pleasant surprise for us. We were only expecting to do about 700-800 tons in the current financial year, and another 700-800 tons we were expecting it to be added next year. But I think with God's grace and luck, we have managed to start doing 150 tons a month, which is 1,800 tons a year currently, our current run rate. So, suddenly there is a lot of pressure on our production capacity. And let me explain to you, and I know there is a confusion with the investors and analysts that why we are putting up capacity when we already have spare capacity. We do have some spare capacity, but that is in the big line, which is about 2,000 tons per month. That big line cannot cater to the smaller volumes of specialty polymer. That only small lines can cater to that. And we have only two small lines. Now these are almost running absolutely at 100% flat out capacity. We need another small line to start being able to service the smaller volumes. The large will come in, then let us say product like LMC03 starts touching 5 to 10,000 tons per year. That is when we will start using the bigger line for that. But in the meanwhile, we need new capacity to cater to the demand for our other products. It is absolutely imperative. अब demand बढ़ेगी तो हमको capacity लगानी पड़ेगी. थोड़ी कैपेसिटी हमारे पास स्पेयर है, but that is in the big line which cannot be utilized until the volumes grow very large for one single product.
So here we don't have competition also, sir. Sorry to interrupt. No competition from any side.
No competition. इसमें competition कहाँ है? All my products are patented.
Yes, patented. Please continue.
अब डिमांड आएगी तो मैं कैपेसिटी नहीं लगाऊंगा तो सर्विस कैसे करूंगा? ये तो अच्छी बात है ना कि कैपेसिटी लग रही है, कैपेसिटी इस बार लग रही है क्योंकि डिमांड है.
Okay. So you are explaining that it is the design of the plant and the lines that has required this type of capex in a smaller way.
Correct. हमारी दो छोटी लाइनें वो एकदम फ्लैट आउट फुल कैपेसिटी पे चल रही है. हमको शॉर्टेज फील होने लगी है.
करेक्ट सर. सर ये जो अभी 150 टन की बात अपने महीने की कर रहे हैं, इसकी विजिबिलिटी कब तक के लिए आपके पास है सर? अभी
नहीं, ये तो चलता रहेगा.
ओके.
विजिबिलिटी तो इन्फिनिट है ना.
ओके. नहीं, the way you were explaining earlier that we were targeting X percentage and now that has risen by an X%. So 150 ton per month के लिए visibility we have it for a year time. We can execute. We have that much order visibility and the requirement from the customer.
मेरे पास 4-5 महीने के तो ऑर्डर ऑलरेडी हाथ में है. एंड आई एम टेलिंग यू, आई एम मेकिंग अ वेरी क्लियर कट स्टेटमेंट. इसमें कोई विजिबिलिटी की प्रॉब्लम नहीं है. ये कंटिन्यूस बिजनेस रहेगा आगे भी फॉर नेक्स्ट ईयर.
अच्छा. Right, sir. And sir, this has major to do about this flooring part also, sir. This flooring part of the story. That they are. I'm talking about this flooring business. About the that is carpet flooring and all that. These are the main buyer of the product.
Yeah, carpet industry is the main buyer for this product.
Correct, sir. So now if I come to your main business, if I may call so, the film part, sir, here what are the key challenges, sir, currently? Sir, I was listening to one of the player. I'm not known whether they are your peer comparison or not. I'm talking about expo industry. Therein the management was somewhat sounding very cautious that अभी जो demand हम देख रहे हैं वो consumer की तरफ से नहीं है, वो because of flattening because of this supply side के कुछ constraint है, and this may plateau out going forward. So
Pro is not my competitor. They are not in the same field of business. I don't know what they do, but they do not make polyester film or even polypropylene film, if I'm not mistaken.
Okay. So okay. Biax side there, yeah.
I cannot.
Biax and coax, yeah.
I cannot comment on what Expro is saying, but demand for polyester film will remain strong. The only challenge is the new capacities which are coming up. They will put pressure on the margins. So, in any case, last year margins that we got were unprecedented, and I've always maintained that those kind of margins are unsustainable. जहाँ पे आप 70-75 रुपए तक पहुँच गए थे last year, that is unrealistic margins. So these margins have already tapered down, have been muted, and going forward, they will remain at reasonable levels. They will not go back to those levels that we saw last year.
Okay. What is the band that we are eyeing for?
Please understand one thing, demand is growing in India, demand is growing globally, so volume growth is going to happen.
Okay. What is the band we are expecting?
Sorry to interrupt. May I please request you to rejoin the question queue for your follow-up, as we have people waiting for their turn?
If sir allowed.
Thank you. The next question is from the line of Sachin Kasera from Span Investment. Please go ahead.
Yeah, congrats for a good set of numbers. So just taking this previous query that was being asked regarding this new line in polyester film. So is it not that, as you mentioned, that there's some capacity is also coming up and that a lot of capacity hits the market and we are doing a very large expansion. So we could be in a scenario where margins could come under pressure and once again the debt would go up. And that could again create some financial stress for the company's balance sheet. If you could comment on that.
देखिए, कैपेसिटी तो लग रही है, डिमांड बढ़ रही है, देयर इज नो डाउट. बीच पे जब थोड़ी सी कैपेसिटी की बंचिंग हो जाती है तो मार्जिन कैन कम अंडर प्रेशर. बट हमारा डेट प्रोफाइल इज वेरी सॉलिड. आई मीन वी आर नॉट, देयर इज नो डेट बर्डन दैट वी कैन नॉट मैनेज. आज टोटल डेट हमारा कंपनी का 160-170 करोड़ रुपया है एस्टर में. And the debt that we have taken in the subsidiary is a very, very low cost debt. Total cost of debt will be 5%. So अगर मैं overall भी देखूं, the total debt is absolutely manageable even in the worst of circumstances.
What is your sense, what will be the peak debt on a Concall basis you will end up having post this capex?
ये मान लीजिए 15 say about 500 to 550 crores.
500 to 550 crores. Okay. Secondly, we keep nowadays listening that most of the polystyrene guys, including you, are trying to increase the share of value-added products in the whole polystyrene basket. So where are we in that journey? And secondly, how do we see that mix 2 to 3 years from now when the new line comes up?
So I have been saying that we are doing this very successfully. Last year हमारा 17% था, अभी हमारा 20-21% के आसपास है, and our target is to reach about 30%. And we have a clear-cut path and a plan in place to make that happen. And that will decommoditize and decyclicize the polyester film business to a certain extent.
But that is on the existing capacity, or you think you can sustain this 30% because you have a large chunk of capacity with the new plant coming up? So once the new plant comes up, will the 30% again go down, or you think with the new plant, the way you have designed some of the new products, even you will be able to sustain this 30% in the medium term?
No, so 30% is based on Ester Industries capacity right now. When the new capacity comes up, this percentage will drop, but will again start picking up once the value added starts there as well.
In the new line, sir, what is your sense? How long will it take you to reach 25-30% share of value added?
I think number 2 years.
2 years. Okay. Secondly, sir, on this engineering plastic, we have seen some significant improvement in profitability after a long period of time. So, one, what is driving this? And secondly, is this sustainable? And if yes, then are we also looking in terms of an expansion of the engineering plastic business?
Yes. So we are relocating the business from Khatima in the north to a new location in Gujarat, and this is being done because this will save a lot of cost on logistics. Efficiencies will go up. In any case, we are falling short of space. So in the new unit, we are expanding with one extruder with an additional capacity of 10 to 12,000 tons because हमारी demand बढ़ गई. We are running absolutely flat out. हमारे पास कोई spare capacity नहीं है. Demand है लेकिन capacity नहीं है.
We are rather going for job working.
Sorry?
We are rather using job workers to do the volume for us, sir.
A little bit. You're absolutely right. We are getting some job work done outside because we don't have our own capacity. So the demand is very strong from the downstream industry, and we expect the business to do well in the coming quarters.
But sir, what has caused a significant improvement in profitability of this business? And is it sustainable, this type of profitability in the medium term? We can understand that there may be strong demand next 1-2 quarters, but do you think there is a structural shift that has happened? If you could do a little bit more on understanding that basis.
देखिए, एक तो ये कोविड के बारे जो पूरा ग्लोबल लॉजिस्टिक्स हिल गया है. Commodity prices have gone up tremendously high everywhere, whether it's steel, cement, polymers, chemicals, everything the prices have shot up. So this has also led to increase in prices. And margins have improved tremendously. I'm not saying that these kind of margins will be sustained forever, but we expect much better margins compared to the previous years.
What do you think, sir, is a more sustainable margin for this business from a 2 to 3 year perspective?
इसमें about earlier, if you talked about 2 years ago, we used to be doing 5-6% EBITDA margins. I think sustainable margins will be in the 13 to 15% range. अभी तो margins are much higher.
Yes, currently they're I think 25-30% if I get it right.
Right. But eventually they'll come to about 15-16% तक आ सकता है, right? Sustainable margin.
And will we have to invest any major sum in terms of this relocation expansion of capacity in engineering plastic?
Yeah, about 45 crores is being invested, which has already been approved by the board. I mean that happened 6 months ago, and that process is on. And we will complete the relocation in the first or second quarter of next calendar.
Sure. Thank you so much, sir, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisor. Please go ahead.
Sir, hello.
Yes.
Hello.
Yes.
Hello. Sir, you told just now that the margins in respect of various verticals are little higher than what it should be. So what are the margins today and what you are expecting?
So as far as the film business is concerned, I have already said that the margins have come down compared to last year. And
No, yes, sir, I agree. But what was in last year and what is today?
That number Pradeep will share with you in a moment. Let me complete.
As per the segmental result, the EBIT margin for film business, Q1 FY21 was 34%, and in the Q1 FY20 it is 18%.
Correct. You're absolutely right. Going forward, we expect this to be maintained at 18%. Let's say 16 to 18%.
Okay.
As far as the specialty polymer business is concerned, the margins are fixed. So whatever happens, the margins, it's not a commodity business, it's a technology business. So इसमें कुछ भी हो जाए, margin नहीं move करता है.
Correct.
So इसमें तो we expect about 35 to 40% EBIT margins for time to come.
Okay. And sir, we are our utilization capacity is 100%.
Where in film it is 100%, in engineering plastics it's 100%. In specialty polymers, you cannot take the nameplate capacity as a fixed number, because for different products the capacity is different. किसी product में आपका batch cycle time ज़्यादा होता है, किसी product में कम होता है. अब जैसे हमारी दो small lines हैं, they are running full capacity. It's only the big line which is running under capacity. जैसे जैसे हमारा product का volume बढ़ेगा एक single product का, we'll shift it to the big line and that capacity utilization will also start increasing. So don't go by capacity utilization in specialty polymer.
Okay. And what is our market share in respect of various verticals in which we are?
In film business, we are at about 9 to 10% of the domestic market. In engineering plastics would be a similar number. Specialty polymer में market share का कोई meaning नहीं है, because we are not in competition with anybody.
Okay. Thank you very much. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ravi Nagda from individual investor. Please go ahead.
सर क्या आप नेक्स्ट ईयर 350 to 400 करोड़ का स्पेशलिटी पॉलीमर में रेवेन्यू कर सकते हैं?
नेक्स्ट ईयर में नहीं. इस साल में हमारा होगा about 130 to 150 crores compared to 55 crores last year. Next year there will be a substantial increase, but 350 to 400 crores will take to about 2 to 3 years.
ओके. और सर एक नया प्रोडक्ट जो LMC है उसके बारे में सर कुछ बताएं.
Yeah, LMC03 has been completely qualified techno-commercial. That means technically, commercially, it is approved product. Now our customer is introducing the product based on LMC03 into the market, and the ramp up will start now. They're introducing it into the market in January. तो उसके बाद में धीरे-धीरे ऐसा ramp up चालू होगा, and very good volume indications have been given by the customer.
Okay, sir. Thank you.
Thank you. We take the next question from the line of Pratap Makwana from Forbes Marshall. Please go ahead.
Good afternoon. Many congratulations to Singhania sir and whole Ester team for the fantastic result. I have 4 questions. While you are expanding well to match with the demand, can you throw some light on the improvisations to improvise the utility and energy conservation as per the regulation 134/3, which is happening into the ongoing plant and successful expansion? That is the first question. Second, sir, very good. Again, good part is that you highlighted the year-on-year performance as per the feedback we have provided last time. Can you throw a light on that, the new product which is due for the testing for the Austria engineer supposed to visit for the line testing? And third, what is the EPS forecast for the upcoming quarter? And for the last question on that, the dividend yield, which 190%, 1.9 rupees, which is due for September, is do we feel that it's slightly late compared to the last year for a couple of months?
No, our dividend policy is very clear that up to 20% of profits will be distributed as dividend, and we are maintaining that. So there is no deviation from the policy. As far as the energy conservation is concerned, I don't have specific numbers to give you right now because we were not expecting this question. But energy conservation is an ongoing process which goes on in our company on a regular basis. It doesn't stop ever. So, energy conservation is an ongoing exercise. So it goes on continuously. We try to save costs and in terms of energy and power, and we look at various aspects of this on a regular basis. और कौन सा question था?
About that one line testing was due from upcoming visit from the last June month or May month from the Austria engineer for the new line.
They are here and the line is being commissioned. It will be commissioned this week. The man has come finally. So
I think hopefully the production can be realized or invoiced in this month itself.
Yeah, towards the middle or end of this month, we will start moving some volumes.
Okay. And sir, so we wanted to know about EPS, rising the EPS, how much percentage for the next upcoming quarter?
Well, let's wait and see how things go, but I think we'll see some good numbers. Okay. I cannot give an exact number.
Thank you, sir. Thank you.
Thank you. The next question is from the line of NM Modi, individual investor. Please go ahead.
Yes, sir. Good afternoon. Just my query was regarding, sir, relocation of the plant which we are doing for the engineering division. Sir, how much time it will take?
We will complete the relocation by between March and June next year.
Okay, sir. Sir, will it require some downtime for the production, sir?
No, because we are starting up a brand new extruder first in the new location, and then we will start shifting the existing extruders. So there will be no loss of production or sales.
Oh, very good, sir. Very good. That's all, sir. Thank you, sir.
Thank you. The next question is from the line of V. Surendra, individual investor. Please go ahead.
Hello. Hello.
Yes, go ahead.
Sir, congratulations for good results.
Thank you.
My question is on that engineering plastic business. Sir, recently you must have seen that our automotive industries and this small appliances industry is rising like anything, expanding, and I think definitely there will be demand surge for engineering plastic. So what my question is that why is it the present capacity is about some 30,500 tons, and again that new extruder we are putting, the capacity goes to around 18,000 tons. Sir, what I want to say is that this capacity is not there may be demand will be more than our capacity. So,
right now the demand is more than our capacity. That's why we're putting in a new extruder.
But why not the demand should be more? But then we should put more capacity expansion, maybe about 30,000 tons or like that.
भैया पहले मेरे को एक्सट्रूडर तो लगाना पड़ेगा ना. I have to create capacity to meet demand. Correct. That new capacity that we create will not get filled up on day one. Obviously, it will take time for it that extruder to fill up completely. But I can't put a smaller extruder. I can't increase capacity in the same proportion as the demand is increasing.
अच्छा, ठीक है sir. Thank you. कोई question था sir, but good result and thank you very much.
Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead. Mr. Kapoor, you may please go ahead with your question. Mr. Saket Kapoor, if you have muted your line, please unmute it and go ahead with your question, sir. As there's no response from the current participant, we take the next question from the line of Shanti Patel from Shanti Patel Investment. Please go ahead.
Yeah. Sir, follow-up question. What is the proportion of our film turnover in the total turnover?
Of which product?
The film.
Film is at about, Pradeep is about
70 to 75%, in the range of 70 to 75%.
70 to 75%.
So, sir, as you told, our margins are going down in respect of film, correct? So, effectively, in future, automatically the profit will go down overall.
Yeah, but it's being compensated by increasing specialty polymer and engineering plastics. where the margins are very high.
No, I agree with you, but since the proportion of sales of film is high, the impact will be also very high.
Yes, it could be higher, but again, I'm saying we may not be able to make up the entire drop in film from these two products, but a substantial portion will be made up.
Okay, that's correct. Thank you very much. Thank you.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. I'd like to remind all participants, if you have a question, please press star then 1. Ladies and gentlemen, that was the last question for today. So we have one question lined up. It's from the line of Rahul Natkar, individual investor. Please go ahead.
I have one question. Hello, am I audible?
Yes.
Yeah. Just one question in terms of with regards to the last question asked. So when we are seeing the specialty polymer, the polyester film margins are at low, do you expect some improvement happening, and what are the spreads like? What was the spreads during Q1 and what are they at current levels? If you can give some
sorry,
guidance.
I didn't get your question. Can you please repeat?
On your polyester films, the margins have reduced vis-a-vis last year, which was anyway unsustainable, as you had mentioned. But what were the spreads in your polyester films business in Q1 vis-a-vis what are they currently running at in July and early August?
Pradeep, can you answer that question, please?
Yeah. So the value addition, 12 micron Corona film, the value addition in first quarter, June 21, was about 36 rupees, and currently we are at 40 rupees a kg.
Okay. And do you expect this to improve going forward?
It will remain at the current levels, in the region of the current levels.
It will remain range bound.
It will remain range bound.
And do you expect any increase in volumes per se in your polyester film business?
We are running at full capacity. I have no capacity, so the volumes cannot go up beyond what we have. Now the volumes will really go up when a new line starts up next year.
Okay. And in terms of your specialty polymers investment that you're making at around 90 crore, when would that start the commissioning and the revenues will start flowing from there?
So that is going to happen in phases over the next 1 year, and I think by September next year we will complete it, and revenues will start flowing in proportionately there.
And any debt you're planning to raise towards that, or it would be out of internal accrual?
We'll raise some small debt for it.
Not a significant component.
A small debt, small portion of that will come from debt.
Okay.
Thank you. The next question is from the line of Ashok Shah from LSC Securities. Please go ahead.
Thanks for taking my question. Sir, my question is regarding the industry. What is the future of the industry? Because currently demand is more and production capacity is low. So everybody is expanding. So in future, can we expect next 2 years there will be demand and everything will be okay? And again, also on the raw material side.
What product are you talking about?
Yes.
Which product line are you talking about?
No, all the product line. We are expanding.
Polyester film. Polyester film. All the three are completely different. So polyester film demand is growing, capacities are coming in. In engineering plastics, demand is growing. Not many capacities are coming in. We are expanding. I am not aware of any other major expansions coming in the engineering plastics field. As far as specialty polymers is concerned, there is no question of demand or supply. We are doing a specialty business. We have no competition in that business. So there is no demand-supply matrix that can be explained here.
Okay. And how is raw material side? Does the price increase is expected to remain high?
Well, I wish I had a clear-cut answer for that, but only God knows how the raw material pricing will work out.
In engineering plastic, which are the industries which we will be catering?
So we largely cater to automotive, electrical, and electronic industry. These are the main sectors.
So it will be related to ABS or some specialized plastic, or what's?
No, not ABS. We are largely into PVT, polyesters. We do very small amount of and nylon 6, nylon 6/6. We do very small amount of ABS.
So we would be supplying carpet to them, auto industry or carpet?
No. Engineering plastics has nothing to do with carpet business.
Oh, okay. Okay, sir. Thank you, sir. Thanks. That's all from my side. Thank you.
Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yeah. So thank you for the opportunity again. Sir, firstly, sir, I would like to thank the management for this presentation, the total revamp that you have done in the presentation. That gives us much better perception about the numbers and the way forward. So please continue in this format. This is very helpful. Sir, secondly, sir, if you could give how the raw material basket has behaved, sir.
Well, right now it has been steady for the last few months, but the raw materials remain very high. And I said before, commodity prices across the globe, across product lines have gone up tremendously. So commodities are running at very, very high pricing. Impossible for us to predict how they will remain forward because they're dependent on so many things. I mean, हमारा तो main dependence is on crude because it's a petrochemical. So how crude prices will pan out, I cannot say. It's very difficult for me to predict.
Okay, and then, what were the price trends for this quarter for the raw materials basket?
Yeah. So we'll tell about the PTA MEG, which is the largest consumed quantity. June 21 quarter, PTA was at about 61 rupees 60 paisa. MEG was 55 rupees. Currently, PTA is 68 rupees a kg, and MEG is at 58 rupees a kg.
Okay.
So, but film, the raw material cost in June quarter was 72. Currently, it is 78.
Okay. And there's a pass on to that with a lag.
Yeah, correct.
Correct. Right, sir. And sir, if we take then the finance cost with this with the loan which we are taken and taken again, what would be the annual cost on the finance front, sir? And what would be the working capital requirement?
So the total finance cost, as Pradeep has already reported, is about 1.5%. It will remain under 2% going forward.
Yes, sir.
Right, sir.
Thank you.
Correct. Thank you, sir. Thank you.
The next question is from the line of Rahul Nadkar, individual investor.
Yeah, just one question from my side. In terms of when you said in the last statement that the spreads were 36 rupees and now it's moved to around 40 that range. So with the 10% increase spread, can we expect the EBIT margin, the absolute EBIT to improve by 10%? Will that be a fair assessment?
Pradeep, can you explain?
Sir, the current margins are 40 rupees, but 1.5 months is still remaining in the quarter. We expect better performance in the next 1.5 months, and therefore there could be some improvement in the margin in the film business.
Assuming it remains at 40, and last quarter it was at 36, which is a 10% increase in spread. Is it the right assessment to assume that 10% increase in EBIT?
Yeah, so currently the EBIT, June quarter EBIT was about 18% in film. We can expect in the range of 18 to 20%.
And the volumes remain strong? As
volumes are very
almost same.
Okay. And any improvement in the value added with this last quarter which you foresee for this quarter?
It's going up on a sustained basis.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Over to you all.
Thank you everyone for attending the Q1 earnings call for Ester Industries, and we look forward to welcoming you again for the Q2 earnings call. Thank you very much. Have a good day.